Good afternoon and welcome to today's webinar on company cars and salary sacrifice. A warm welcome to all of you. I'm Matt Hustwit. I'm Head of Business Development for DJH and I will be your host for today. Today we're going to cover all of the options available, how these are taxed and the upcoming changes that you will need to be aware of. Speaker today is going to be Joe Walters. He's our Director and Tax Advisor who will take you through the content of the webinar, and at the end we'll have the option to answer any questions that you may have. So for those who are new to DJH, who are not currently working with us, I just want to take this opportunity to give you a brief summary of who we are and how we can help. So we're a top 40 accountancy practice and we specialise in building relationships with our clients and providing the all-important trusted advice that you need. Got 16 offices. We operate across the UK and Ireland. So we give national support, but with a local knowledge. Full service practice. We're here to help at every stage of your business journey. And our in-house specialist advisory services, like our tax teams, are all designed to support you and your business. It's a small bit of housekeeping today. So as always, your microphones are all muted, but we do want you to take part in the webinar and ask any questions that you may have. So with this in mind, if you post any questions into the Q&A section of the webinar, and at the end of the presentation, Joe will get to answer as many of those as we can. So gender, going to cover off company cars, the benefit in kind, how that is calculated and the rates of the same. Small bit on van benefit charges, salary sacrifice explained in more detail, and the difference between that and an electric vehicle, comparing those options for you, and finally the upcoming changes and the ability to ask any questions that you may have. So for now, that's it from me. I'm delighted to now pass you over to Joe to get the webinar underway.
Brill, thank you very much, Matt, and good afternoon, everyone. So, like Matt said, I'm going to talk to you about the company cars, the benefiting guides with these, whether they're petrol, electric, diesel, hybrid. It's what I always say to my clients is it's not a one answer fits all for everything. So obviously after this, there will be a link after the webinar for you to get in touch with your local DJH contact or office who can talk this through for you. But we'll first start off with what are company cars. So a company car, the definition of that is a vehicle provided by an employer for employee use. So this is effectively the company buying the car and then the employee or the director having use of this vehicle. So this is, in HMRC's eyes, treated as a taxable benefit. And I'll talk to you a little bit about that later on of how that's calculated. And then the sort of compliance side of this is the employer reports the value of the benefit in kind to HMRC using a form P11D. So some of the people on this webinar might do P11D already, or maybe say a tax return. It's a yearly thing that needs to be reported to HMRC by the 6th of July, and then any tax to be paid by the 19th or 22nd of July if paid electronically. Again, I'll talk to you about that later on as to how that's calculated. And the different tax rates depend on what type of car we're looking at. So when I say that, I mean whether it's fully electric, whether it's petrol, whether it's diesel or hybrid. These all have different benefit in kind rates, and some are more beneficial than others. And surprise, surprise, the electric ones are obviously more favourable. But I'll explain and I'll go through these later on in the slides. So I've mentioned a bit about benefit in kind. So that the basics of this are it's a non-cash benefit provided to employees. So just as a substitute for this, you can a sort of an alternative is private medical insurance. This is a payment that is paid by the company on the behalf of the employee, and the employee is benefiting from it, hence the benefit in kind wording. The company cars are one of the most common benefit in kind benefits, and that's due to obviously the employee needs or the director's needs and the massive tax saving that it can have on the company, which again I'll speak about later on. And then the employees and the directors pay the income tax on the benefit in kind. So whatever that benefit in kind amount is, which is calculated by doing a sum that I'll speak about later, that is then added to the employees or the directors' income tax and then taxed like that. And then lastly, on the P11D that I mentioned before, that needs to be reported every single year, this is where it's calculated. The Class 1A national insurance is calculated from the company, and that's payable when submitting the form P11D. And this rate is 15%. Some of the viewers on here might know this as 13.8%, but this has recently increased. And this is payable when submitting the form P11D. So, how is the benefit in kind calculated? So, we've talked about what a company car is, what a benefit in kind is, but obviously the more important thing is how is this benefit in kind calculated? So, what we need to get for the car is the list price. So, what the list price is that is the cost when new. So let's say you're leasing or purchasing a second-hand car. It's not the cost of what that is. It's when the car is registered as new. So this is the list price. That's the important thing to know. And then it's multiplied by the appropriate percentage, which I'll speak about later on. We've got a nice table for you. And then that is then calculated as the benefit in kind and taxed at your marginal rate of tax. So that's whether you're a 20% taxpayer, a 40% taxpayer, or 45% taxpayer. And like I said before, there will be a table that explains this, and the appropriate percentage will depend on the CO2 emissions and the electric range. So more if it's electric, if it's a fully electric vehicle, the percentage is a lot lower than whether than it being a diesel car or a petrol car with higher emissions. And the fuel type obviously makes a difference. HMRC are obviously very keen on pushing the electric vehicles for us all and being a lot more environmentally friendly. And that's when the company and the individual will have greater benefits. And lastly, on there, the higher emissions generally mean the higher tax that's going to be impacted for the company and the employee. So this is what I was alluding to before. This is the company car benefit in kind tax rates table. Obviously, there's a lot of numbers on here, and I'll just run through a few of these for you, and then you'll get the gist of what the others mean. So we'll look at the top first because that's the most beneficial. That's a car that's fully electric. So obviously there's no CO2 emissions. The electric range is not applicable because it's fully electric. And the tax years on the right-hand side, as you can see, 26, 27, which is what we'll be going into next month, starts at 4%. So when we look at the calculation that I mentioned before, where we have the list price times by the benefit in kind rate, these are the rates that you multiply this by. So let's say a car was costing £50,000 and they had that 4%, the fully electric, that's a £2,000 benefit in kind that they'll receive each year. Okay, so obviously that's until 2027. So next year that increases to 5% and then so on to 7%. So as you can see here, the further down the table you go, which alludes to more the hybrid or petrol or diesel cars, the higher the percentages, so the higher the benefit in kind rates are. So the personal tax and the company tax will then be affected by this rate. The important thing to look at here when tax planning is if you have a look at the hybrid, so let's say the one below that I've just gone across with you all, that's CO2 emissions of 1 to 50 and the electric range being more than 130. Okay, so from next month, the benefit in kind rate is exactly the same. It's 4%. From the year after that, it's exactly the same again to a fully electric vehicle at 5%. However, after that 2 years, that takes a massive jump from 5% to 18%. So that will mean that the benefit in kind that's added onto the employee or the director's income is going to be taxed. And it's going to be a bigger benefit in kind and therefore taxed a lot more than what it would be if it was fully electric. So a lot of my advice to my clients that I'm doing at the moment is asking what sort of car they're after. So whether it's fully electric or hybrid, and if it is hybrid, it's important to mention about those 2 years for the lease because you want a 2-year lease, and then after that, it might be worth going fully electric or buying the car personally rather than through the company. And as I said at the start of this webinar, everyone's circumstances are different. So just make sure you get in touch with your local DJH office so that they can speak with this for you and go through everything that's needed. The important thing to know on this table as well is these are the standard rates. And if the car was diesel, then these rates are all upped by 4%. So that obviously just impacts the employee and the or employee or director's tax and the company's Class 1A at 15% that we spoke about before. At the bottom, it's got the fuel benefit charges. So this is, let's say, if the company was providing the fuel for the employee or the director, then this will be in addition to the company car benefit. So this will be a fuel benefit charge. So as you can see, the rates go slightly, they increase each year slightly, and this figure will be times that whatever the rate that you can see in that table above. So let's say it was a hybrid car that had more than 130 miles, then for 26, 27, that 29,200 will be times at the 4%, and that's what the fuel benefit charge will be for that year. And this isn't just a one-off thing, this is every single year, which is why it's important to get this right. Okay, so I'm just conscious that I've gone through quite a few numbers there, and there was a lot of numbers on the screen for you all. So what I'm going to do is this is just a worked example as to how it would work. So this car had a list price, and remember, list price is price when new, of £40,000. So if we have a look at the 26-27 tax year, so from next month, the benefit in kind rate is 4%. So that benefit in kind value for the full year is £1,600, which is the 40,000 times 4%. So that £1,600 is bearing in mind that employee or director has full use for the full year, the availability of that car for the 365 days. If that's not the case, then it does get proportioned. And then the taxpayer, let's say they're a 20% taxpayer, that's then times at 20% because that £1,600 gets added on to their income. So if any of you complete a personal tax return and you have your tax computation and you have a look at what your income is there, it would simply get added on to your employment. There wouldn't be any employee national insurance on this. It's purely just tax at either 20%, 40 or 45%. So I said there's no employee tax on this. However, there will be employers' national insurance. There's no employee national insurance. However, there will be employer national insurance, and that's Class 1A. And that's reported via the P11D and submitted each year. So that £240 is effectively that £1,600 at 15%. So that's just a worked example. So if we were to look at the table before, all you'd need to do is just swap those figures with whatever sort of car that you're looking at, and it would work in the exact same way. And this is a yearly thing, and it's not just a one-off. So it's important to look at the future years as well, which is why I mentioned about the two-year lease if it's not fully electric. Okay, so pool cars. What these are a lot of clients like pool cars because there's no benefit in kind on these. However, the reason why they're no benefit in kind is because they've got very strict conditions which HMRC have applied, which I'll run through with you now. So what a pool car needs to have is it needs to be made available and actually used by more than one employee. So when I'm going through these, it's not just that it needs to just meet one of these criteria, it's got to meet all of these criteria. So as I say, it's hard for it to be a pool car because of the tax advantage that the employee and the company that would have. It's got to also be made available by reason of the employee's employment. So it's got to be to do with their actual line of work. And they've also got to make it available to all employees, so they can't segregate it or section it off to sort of one person that can be using this car. It's got to be for all employees. And this is one that catches a lot of people out, which is the private use of the car has to be merely incidental to the employee's use of it. So you can't be using it really for your personal journeys, because that would then be caught under being a company car and a benefit in kind. And then also, just to sort of solidify the point I've just mentioned there, it can't be kept overnight at the employee's premises. So as you can see, these are quite strict criteria, because if someone was using that car personally, it would be hard to justify these points, and that's the reason why HMRC have done this. And then also, lastly, the employees include directors and also extends to employees' family or household. So obviously, if you're lending that car to a part of your family, then it would still be taxable on the individual that's employed through the company. So even though pool cars are obviously it's great when you can meet this criteria because there's no benefit in kind, it's still hard to fit this criteria to get away with not paying that benefit in kind tax rate. So as I say, all of these need to be hit and not just one. So I know that this is a company car webinar, but I thought it'd be beneficial for me to just mention, just in case there's anyone that's looking for a company van or a personal van, to just run through these as well. So on this table, a little bit more friendly table for you. There's not that many figures, but let's look at the 26-27 that's starting next month. The van benefit is 4,170. So this is a lot simpler than what the benefit in kind table is that I showed you before, because this isn't calculated by using the list price times the percentage. This is literally the benefit in kind value. So there's no sums for you to do or anything like that. It'd be 4,170 that's added onto your income if you had that van that used personally for the full tax year. And it's exactly the same with the one below as well. The fuel benefit is the benefit in kind, and there's no percentage that you need to run away with this. That's simply what is added to your income. And as you can see from right to left, it's year on year, and this is only slightly increasing each year, and these come out a fair few months in advance of the tax year. So as expected, it's going to only increase only slightly, but then we'll wait to find out what 27, 28 and future years are as well. So salary sacrifice. So this is one of the ways that you can have a company car, and it's a good tax efficient way of doing it. So let's say you have an employee on a higher rate tax bracket. What you can do is you can have this company car deducted from his gross pay. So when I say gross pay, that is before any national insurance and tax is deducted from that employee's payroll. And then that company car is provided to the employee in return for this salary sacrifice. And that obviously reduces the gross salary. That reduces the net salary after tax and national insurance. However, that last point is important because not everyone will fit this criteria. Let's say you have a sole director on a director's salary, which is 12,570. This isn't really made for them. It's more for employees that have a higher tax bracket that want to take advantage of reducing their gross income for that tax and national insurance because the national minimum wage rules will apply. They've got to comply with this. So just make sure that when the salary sacrifice happens, the net amount, so the amount after the amount that's been salary sacrificed, complies with the national minimum wage rules. So when this salary sacrifice happens, the benefit in kind will still be applicable. So what I've mentioned to this slide previously, so that'll be either looking at back at that table, seeing if it's fully electric, petrol, hybrid, or diesel, seeing the list price, finding the benefit in kind rate, and then that amount will be added to the income that that employee or director has earned and taxed at their marginal rate of tax. However, like I said before, there is no employee national insurance on the benefit in kind, so they will be benefiting from not paying that employee national insurance. Okay, so why does salary sacrifice work best for electric vehicles? Well, as we saw on the table, the benefit in kind rates for fully electric vehicles are minimal. Even though this is a yearly thing, I believe it was 4%, 5%, and then 7%. So the next 3 years, we know from what's come out that the benefit in kind is going to be very low in comparison to what they're benefiting from, which is personal use of the company car. And like I said on the last slide, the national insurance savings for both employer and employee. So the employee is benefiting from not paying national insurance for salary sacrifice because it's deducted from the gross pay, remember. And then let's say they're under the £50,000 income. So they're a basic rate taxpayer. That'll be 8% national insurance they'll be saving on this amount. And then if you swap to the employer's side, they'll be benefiting from not paying the effectively the salary of this amount. So they'll be saving on the class one secondary, which is the national insurance that companies pay. They'll be saving on that at the 15%. But it is important to bear in mind, obviously, salary sacrifice is great, but they still will have that benefit in kind, which is reported on the Form P11D each year, and the employer will pay Class 1A national insurance. So it will be a national insurance that they pay. It'll just be different to the normal salary national insurance. Okay, so I've mentioned company cars, I've mentioned salary sacrifice. Car allowance isn't one that I've mentioned, but effectively, what that is, it's an increase in salary and it's taxed as normal. So it's taxed literally like the employee or the director has received an uplift in salary. And so we've got the company car. If we go from left to right there, that's employer owned if they got the company car. And that's taxed and it's worked out via the Form P11D. And then that's added onto the income of the individual. The salary sacrifice that comes off the gross, like we mentioned before. So it's tax efficient for electric vehicles because the benefit in kind rate that it applies to on the table. It's a great way to reduce the gross pay, which is before the tax and national insurance has been deducted from the employee or director. So it's a great way of doing it. However, there will still be a benefit in kind. So that's why it's important when looking at the table, using these rates to see whether it's something that works right for you. And as I say, it's worth talking this through with your DJH contact because everyone's circumstances are different. And then the car allowance, as I just said, it's simply an increase in salary, which gives the employee more income to be able to purchase that car. Okay, so this is all the sort of here and now, and then there was a sort of the next 2 year rates. However, as well as that, we've got the mandatory payrolling of benefits from April 2027. So what that is what I've said before is usually this benefit in kind was calculated using the sum that we went through before, and it was reported on Form P11D and paid on either the person's tax return or through their PAYE. However, from April 2027, so this has been put back at least once. It was meant to be put in place from next month, but they've put it back to April 2027. This needs to be, it's mandatory to be payrolled. So what that means is when the payroll department produce the payslips, the benefit in kind is taxed each month rather than at the end of the year, which is what it can be done now. So this is mandatory from next year. And then the ones above and the one below, that is the benefit in kind percentages rise. As we know with a lot of things with HMRC, that it's not usually a reduction in these sort of things. There's more an increase in tax. However, if you get the right company car, then it still can be beneficial. Because what it does is this company car, when purchased from the company, it's a deduction for corporation tax as well, and that's a separate matter to what we're speaking now, and that's better to run through with your DJH contact because, as I say, everyone's corporation tax percentages are different, and it's relevant to the individual. So I believe that's everything from me from now. So I'll pass you back to Matt. Thank you.
Fantastic. Thanks, Joe. Thanks for that. Lots of information there. And we've had a flurry of questions, so there's a few to go through, Joe, if that's okay with you.
Yeah.
Still time. If you want to ask a question, please pop it in the Q&A box now, and we'll get through as many as we can. So first question was, assuming that this is just for the UK only. This is a UK tax rates and UK.
Yeah. So this is purely UK. If you're overseas, then it would be an international tax question, which, as a lot of you probably already know, we've got our own department on this, so that'll be a question for them. But these rates that I've run through are for purely UK rates and not overseas.
Fantastic. Thanks, Joe. Any suggestions? Are you aware from conversations with your clients of any petrol or diesel cars? I'm assuming this is the hybrid ones that are a popular choice that have a range greater than 130 miles. What kind of cars are we looking at there?
Yeah, so in terms of the types of cars, I don't get involved with a lot of that with my clients because my main concern is obviously the tax rate rather than the types of cars. So if you have a look at that table, the beneficial is the higher electric range. But we do have contacts like leasing companies that I put in touch with my clients because they're best to advise as to what the sort of best type of car is for that. I can obviously explain on the numbers, but in terms of what car, they're best fitted for that.
Bro, perfect. Thank you. And I'm sure the car dealers will help with those figures as well, where they won't.
Yes, yeah, exactly.
Yeah, brilliant. With regards to the charging costs, how is that treated? Does that the company pay? So whilst the car's being charged at the company, is there any benefit in kind for that? And if
Yeah.
so, does it include VAT?
Yes. So with that, the company, the big benefit for electric vehicles is the company can purchase the electric charging point and get all that fitted, um, either to the premises or to the employee or director's home, and that won't suffer any benefit in kind. So that's obviously a really big advantage that a lot of my clients do because rather than paying it personally after all the tax that they have to pay, the company can pay for this and it's corporation tax deductible as well. And in terms of the VAT, if it's fully electric, then I believe, again, it will have to go to more of a VAT specialist, this, but I believe it'll be 50% that they can reclaim as long as it's fully electric. So if it's not fully electric, then there won't be any VAT to be reclaimed as far as I'm aware.
Well, so the energy costs effectively for the company would just go in the profit and loss statement as usual as an
Yeah,
expense.
Yeah, that's
Brill.
it.
Thank you. Next one. What if the home address is the company's registered office? Can this be used? Can be used by anyone who is a director.
So the company's address is the home address. Is that right?
So the registered office address of the company is the home address. Yeah.
Yeah, that's not a problem at all. A lot of companies use their home address on company's house as the registered office, and this shouldn't be any issue for getting that over the line.
I'm just wondering if we need to clarify which part that question was about. I haven't got a name. It's been anonymously submitted, but could that be in relation to the pool car, or is that anything to do with that now? Or
So what if is this the one what if
yeah,
the home address is the company's registered address, so it can be used by anyone who is a director? So again, it's going back to that slide where we had, I think there was about 6 or 7 conditions. As long as it meets all them, the registered office, it won't be too much of an issue, but it can't be obviously used just solely for that person. So if there's a few employees that work there, then it's got to be used, or it's got to be available to be used by the other individuals. So it does catch. So the people that are trying to do this, that have the registered office as the company, their personal home, it won't just be that they fall back on. There'll be other conditions where they've got to actually satisfy them, and that's why it's so strict. Just to make sure that it is a pool car rather than personally being used.
yeah, great, thank you. If that did, whoever submitted that question, if that didn't answer that as you thought, if you want to get in touch with us, we'll make sure that we'll get you the details. Thanks very much. Have they excluded double cab trucks from vans and put them into cars for benefits?
Yeah, so double cab cars have stopped now, basically. That I can't remember the exact date. It was, I believe it was last year. But it used to be really beneficial because double cab pickups used to be fully deductible in the company. And it didn't really suffer. It didn't suffer a benefit in kind for the individual. So a lot of tax planners sort of put that through the company, either usually on a higher purchase because they get the full deduction. But that double cab pickup rule has now been removed by HMRC.
Great, thank you. Um, so, does the employer need to be opted into a specific scheme that allows for salary sacrifice? For example, not all company car schemes would allow for use of salary sacrifice.
Yeah, so not when I was talking to the salary sacrifice through those slides, not every employer offers this. You've got to go to your employer first, and they've got to be opted into an appropriate scheme. It's not just oh, I want to do salary sacrifice and let's start it tomorrow. It's got to be a conversation with the employer to allow the sacrifice before any actions are taken because they've as the question says, they've got to be opted into a scheme to be able to allow that.
And is that something we support with the schemes?
Yeah. So we can more than happy any employers out there that are looking to maybe offer this to their employees, we can definitely help our clients out with this.
Bro. What happens if an employee with a salary sacrifice arrangement goes off long-term sick or on maternity and then falls below the minimum salary requirement?
Yeah, so this it'll be more of a payroll question, but this should fall within the sort of scope of being under the minimum wage, and they wouldn't be able to have that company car, as harsh as it sounds, because that's one of the requirements. And if they were to fall below that income, then they wouldn't be allowed that company car. The sort of additional to that, which is slightly different. But if the car was unavailable for, let's say, 30, I think it was 30 days or more, it might be 30 or 31. If it's unavailable, let's say it's gone in the garage or anything like that, then the benefit in kind would stop. They wouldn't be charged on it if it's not available for over 30 or 31 days. But yeah, so coming back to the original question, if they were to fall below the income threshold of the minimum wage, then they wouldn't be allowed that company car.
Okay, thank you. Um, will the same rates apply whether it's a limited company or a sole trader?
Yeah, exactly the same. If you have a look at the graph, then apply that to the sort of cars that you want, and then obviously the fuel as well, anything like that. It's all exactly the same rates.
Great, thank you. Do the pool car rules apply to vans? So has it got to be a car or does it include the vans?
Yes, yeah. Basically, if the van's made available to everyone in that office, and again going back to that slide where all those conditions are met, then there can be it can be a pool car even though it is a van, and not taxable on the individual. So yeah, that's no problem as long as there's no personal use. That's the main thing, and that's why it's a pool car.
So generally, would you say, Joe, that that a pool car or a pool van, they're generally left at the premises? They wouldn't be driven home by the.
Yeah, that's it. So obviously for people that want to try and use this personally, that they're going to be using it at their own premises, aren't they? And that's why one of the rules are to try and distinguish whether it is a sort of just like a company asset and that's it, or it's a company asset that the individual is using personally for their benefit.
Right. Will the benefit in kind for directors still be available in 2028? And if so, the tax rate. So, yeah, sorry, missed the first part of the webinar. So that was on your chart, wasn't it, Joe? 2028.
Yes, 27, 28. Yeah, that should all be on there. I think it was 26, 27, 27, 28, and 28, 29 as well. So I think we've put on the next 3 years. So
No.
if you just have a look at the sort of middle, start to middle of the webinar, all those rates will be on there for you.
Yeah, so I will cover it off in a bit, but we are going to make sure that you get the slides and the recording sent out to your inboxes, so you'll be able to revert back to that. Just looking at time, we're okay for time. What if you only have space for two vehicles at the business premises? So is this potentially a pool car question, do you think?
Yes. Does that basically mean, I believe that probably means that if there's no space at the company premises, then they have to take it home. I assume that question is, and if I've assumed wrong, then obviously just get back in touch, please. But again, it does come back to those points. If even if there's no room at the business premises and you decide to do that, to park that up at home, then that wouldn't come under the pool cars, and that would then be taxed as a benefit in kind.
Again, like Joe says, if that didn't answer it sufficiently, then please obviously get in touch with us. And on salary sacrifice, does the employee pay the benefit in kind? And if so, where is the benefit in salary sacrificing?
Yeah, so basically what salary sacrificing is, let's say a company car is the lease costs are, let's say £500 a month. That employee is then saving tax and national insurance at that point of that £500. Um, However, what they then have to pay is the benefit in kind rate. So we have to do that calculation, which we spoke about before in the web and in the earlier in the slides, and that benefit in kind then gets added on. That's different to obviously what the lease payments that you're paying. So that difference is going to be hopefully what you're benefiting, because if it's fully electric, like we saw on the example, I think it was 1,400 or 1,600, wasn't it? That's a lot less than the 6,000 if you're paying £500 a month. So you're benefiting from that. And obviously the national insurance, like I spoke about before, where the employee doesn't pay national insurance when it's salary sacrificed, and they also don't pay any national insurance on the benefit in kind amount as well. They'll just pay the tax.
So you're technically benefiting on the reduction in the gross salary and not paying the tax and NI on that.
Yeah, that's it.
Perfect. Um, with regards to company car, any ideas? Is it better to get that on lease or buy outright?
Yeah, so this is where it comes to personal preference. One of the questions where I say get in touch with your DJH contact, because let's say you were purchasing a fully electric vehicle and your year end was coming up. Let's say it's the end of March and you wanted to pay for it then that would be fully deductible for corporation tax purposes if you were purchasing that car outright. So if you've got the money in the company, then that would be a great tax planning exercise. Whereas obviously if you haven't got the money in the company, you do a lease instead of purchasing it outright, and you would get the lease deductions as and when they're paid. So it's all personal preference, it's all circumstantial. So definitely speak to your DJH contact.
Right. We had a request on the location of charging for each driver, home or public. How does this impact the driver or company?
You had a request on the location. Sorry, I don't understand that one fully. So they're charging it either at home or elsewhere. So basically, I again, if this isn't correct, then please get back in touch. But if the company is charging it at their premises, obviously, like we said before, that the company pays for that, and that's fully deductible for corporation tax. If they're charging it at home, then that would be on the employee, just as their normal bills. There'd be no benefit in kind, like I said, because obviously the employee's paying for that anyway, but there would also be no benefit in kind in the installation. If in public, so let's say they're charging this up, and it's a company car, and the employee is paying for this, the employee can get, there are tax rates of how many pence per mile and so on that you can claim back to be able to obviously claw back what you're paying. So hopefully I've answered your question there, but if not, let me know.
Yeah, if not, just get in touch with us and we'll make sure that's covered. Can an employee switch from company car to a salary sacrifice mid-term through a lease?
That might be a question for the lease company and for the car salesman. They'll be able to let you know that. There's no doubt that you'll be able to do it. There just might be some charges for you to sort of say come out of a contract and go into another one, but that'll be based on whatever the conditions were when you signed the contract.
Yeah, and then final one, why is there a requirement to opt into the salary sacrifice scheme? It doesn't seem particularly transparent as an option. Are you likely to get tied into high pricing without alternatives?
Yeah, so this is one that you wanna speak to the leasing company that hopefully your DJ contact can refer you to, or the car salesman. There are different prices, whether you're going to be through salary sacrifice or not. And sometimes, again, this is more of a salesperson that they can tell you this because it depends on what offer there is at that time. But if they can do salary sacrifice, it's usually beneficial because of that saving that you're initially making on the monthly leasing costs. So again, it's circumstantial, and what I'd say is have a look at what sort of cars you're looking at, what the prices are, and ask your DGH contact to sort of run the figures and see whether it's beneficial to do through salary sacrifice or not.
Brilliant. Fantastic. Thanks, Joe. Some great questions there. Thank you for everybody that submitted a question. If it hasn't been added, sorry, if it hasn't been answered substantially, or you want a bit more detail or something a bit more personal, then please obviously get in touch with either Joe or the contact. Just to give you some further details, so our next webinar is on the 14th of April, and it's covering all things cyber. So this is an important area for protecting your business, but it is so often overlooked by many. So our expert tech partners team, they'll be presenting to you, and you can register quite simply by scanning the QR code there. Top tip for you guys, as always, the best way to keep up to date with our webinar calendar is to ensure that you are subscribed to our newsletter. You can simply do that by just visiting djh.co.uk, scroll all the way to the bottom and click the sign up button at the bottom of the page. And just before we go, as alluded to in the webinar, we will send the slides and recording direct to the inbox that you registered for the webinar with. And should you have any further questions or you want some more support, contact details for Joe are there on the right-hand side. But alternatively, please just make contact with your usual DJH advisor. They'd love to hear from you and they would love to answer any questions or help you with a new car. And that's it. Thank you ever so much to Joe for presenting today. Thanks for that. And thanks to all of you for joining. Remember, we're here to help. DJH team are ready. So if today's webinar has got you thinking and potentially dreaming of a new car and you want to chat it through, please get in touch with the team. Thank you.